Welcome back to Investing Talk Podcast. Today, we're doing a focused exploration of WeRide, ticker WRD. They're an autonomous driving tech company.
That's right. Big player in that space.
We've got a recent due diligence report, some updates on what they've been up to, and just a general company overview. Our goal here is really to pull out the key insights, understand what's actually happening with WeRide right now.
Makes sense. Cut through the noise.
We'll look at their financials, where they sit in the industry, recent news, and, the potential risks and opportunities. Think of this as your shortcut to getting a handle on WeRide's current situation.
Good plan. So where should we start? Maybe the basics. What is WeRide?
Let's do that. Give us the overview. What do they actually do?
Okay. So WeRide is a global company really focused on the cutting edge of autonomous driving tech. They work on level 2 up to level 4 solutions. That's quite a range, from driver assistance to, well, nearly full self-driving in specific environments.
And they're aiming these at urban transport.
Primarily, yes. Things like robotaxis, robobuses, robovans, and even robosweepers.
Robo-sweepers. Okay, that's an interesting niche. So their business model sounds pretty broad then.
It is. The core of it is something they call the WeRide One platform. This basically integrates all the key pieces: the software, the hardware components they use, and the cloud infrastructure needed to support it all.
And this platform works across their different vehicle types.
That's the idea. Flexibility seems key. So it can power a taxi, a bus, a van.
And you mentioned they're global. How extensive is their reach?
Pretty significant. They're
Yeah.
publicly traded on Nasdaq, and they have actual commercial operations running in over 30 cities.
30 cities, wow. Across how many countries?
10 countries, according to our sources. So, yeah, substantial international footprint already.
Okay, so they're active globally. How's that translating into, market performance? What have we seen recently?
Well, looking back just a bit, as of May 2nd, 2025, the stock was sitting at $7.35. And there wasn't any huge volatility reported right around then. But things shifted more recently.
Right, I saw a jump. What happened there?
The stock price climbed, yeah, up by 11.24% as of May 12th.
Okay, nearly 12%. That's a decent move. What's likely behind that? Recent news.
It seems very likely tied to recent developments, yes. There are a couple of key things.
Right, lay them out for us. What's been going on?
First off, timing-wise, they're about to announce their Q1 2025 financial results that's scheduled for May 21st. And there's an earnings call planned for that morning, too. Investors are definitely watching for that.
Okay, upcoming earnings, always a potential market mover. But wasn't there something else? A partnership.
Yes, exactly. And this is probably a big piece of that stock price reaction we just talked about. On May 5th, Uber and WeRide announced they're expanding their partnership.
Ah, the Uber connection. Tell us more about that expansion. What does it involve?
It's pretty ambitious. The plan is to bring autonomous vehicles, using WeRide tech, presumably, to 15 more cities globally.
15 more. Over what kind of time frame?
Over the next 5 years. The stated goal is really to speed up the adoption of autonomous mobility around the world.
That sounds like a significant vote of confidence from Uber, deepening that relationship.
It certainly seems that way. It suggests Uber sees real value and potential in WeRide's technology for actual deployment, likely a key driver for that stock bump.
Makes sense. Okay, so shifting gears a bit, let's talk financials. What did that due diligence report tell us? How did Q4 2024 look?
All right, so for Q4 2024, total revenue came in at $19.3 million. But the interesting part is the mix. Product revenue was actually up quite a bit, 46%, hitting $7.1 million.
Product revenue up 46%. Okay. What about the other side? Services.
Service revenue was down 18% to $12.2 million.
So selling more tech, but less service income. Any thoughts on what that might indicate?
It could signal a shift, maybe focusing more on selling their core hardware and software. It could potentially lead to more predictable income down the line. Or it might just point to some challenges on the service side, something to watch in the upcoming reports.
Definitely a trend to keep an eye on. Now, the big question for tech companies like this, profitability. What did the report show?
Well, for Q4 2024, they reported a net loss of $81.2 million.
81 million loss. Okay, so that means a negative EPS, earnings per share.
Correct, a negative EPS, which tells you their expenses are still higher than their earnings at this stage.
So still investing heavily in growth, not yet profitable on the bottom line.
That appears to be the case. Very common in this sector, but something investors track closely.
And a negative EPS makes calculating a standard PE ratio impossible, right?
Precisely. You can't really use a price-to-earnings ratio meaningfully when the earnings are negative. Valuations here tend to be based more on future potential than current profits.
What about other financial health indicators, like how much debt are they carrying? Or are they generating cash? Did the report touch on that?
The due diligence report we looked at didn't give specific numbers for the debt-to-equity ratio or free cash flow. It basically noted that you'd need to check WeRide's official financial filings for those details.
Okay, so need to dig deeper into the filings for the full picture on debt and cash flow. And return on equity would also be negative with a net loss.
Yes, that follows. Given the net loss, ROE would be negative.
And any dividends for income investors.
Doesn't look like it. They appear to be reinvesting everything back into the business, focusing on growth and R&D.
Okay, that makes sense for a company at this stage.
Yeah.
So let's move beyond the numbers. What about the fundamental business factors? What are their advantages in this competitive space?
They have some clear strength. Their autonomous driving technology itself, especially achieving things like the Level 4 Robobus operation, is a big plus. Their brand is growing, and these partnerships, like the expanding one with Uber, are incredibly valuable. Adds credibility and market access.
And how do they fit into the overall autonomous driving industry picture?
They're definitely positioned as a significant player, maybe a challenger to some of the giants, in what's obviously a rapidly expanding sector. The industry tailwinds are there, growing demand, more partnerships forming, continuous tech improvements.
But it's not all smooth sailing. What are the main risks they face?
The report points out a few key ones. Regulation is always a big question mark in autonomous driving. It's constantly evolving. Then there are the costs. R&D in this field is incredibly expensive. That's a constant pressure.
And competition, I assume.
Absolutely. It's an intensely competitive landscape. Lots of smart people, lots of money chasing this opportunity.
Okay, let's break that down a bit more. Can we summarize the key strengths versus the potential red flags from the sources?
Sure. On the strength side, you've got their leading tech position, their proven ability to actually deploy commercially at scale, which isn't trivial. Also, that diverse product portfolio, taxis, buses, vans, sweepers, gives them multiple shots on goal. And getting recognized by lists like the Fortune Future 50 adds some external validation.
Those sound pretty solid. What about the other side of the coin? The red flags or concerns?
Well, the biggest one is probably the regulatory risk that hangs over the whole sector. That's not unique to WeRide, but it affects them. The high cost of R&D, as we mentioned, is a constant financial drain. Competition is fierce. And tied back to the financials, the lack of clear profitability metrics right now makes it harder to gauge their long-term financial health.
You mentioned competition. How do they stack up against some of the really big names, like Waymo or Cruise?
Our sources specifically compare them to Waymo, which is part of Alphabet, and Cruise, backed by GM. So yes, heavyweight competitors.
Very well-funded competitors. What are the main differences the sources highlight?
Waymo is noted as the biggest U.S. operator, really strong in AI and deep learning, and obviously has Alphabet's resources behind it. Cruise leverages GM's manufacturing scale, has focused a lot on urban AV deployments, and has also raised a ton of money.
So where does WeRide fit in against those two? What's their differentiator?
WeRide seems to stand out for its rapid international expansion. They're operating in more countries. However, the flip side is they likely don't have the same depth of financial resources as Waymo or Cruise.
And technologically, are they keeping pace?
In terms of innovation, all three are seen as leaders. Market share seems to favor Waymo and Cruise more within the U.S., while WeRide, as mentioned, has that broader global footprint.
That international angle is interesting. Does operating in more diverse locations give them different kinds of data or market access advantages, perhaps?
That's a good question. It could potentially expose them to different regulatory environments sooner, or different driving conditions, which might feed back into their development. It's a different strategic path than the others seem to be taking.
All right, so looking forward then, what are the key things for anyone following WeRide to watch what's coming up?
Number one is definitely that Q1 earnings release on May 21st. That's going to be critical for understanding their current financial trajectory. Are they improving that bottom line? Is that product revenue trend continuing?
And beyond the earnings report,
Watching the rollout and success of their actual fare charging services, like that Robobus in Guangzhou. Seeing if they can scale those up and generate meaningful service revenue again will be really important.
That shift from product back towards potentially growing service revenue again.
Potentially, yes. Or finding the right balance. Also, tracking that Uber partnership rollout across those 15 new cities, that's a major execution point.
And the major uncertainties or risks still hovering.
Regulation, regulation, regulation. Any shifts there could significantly impact the whole industry, including WeRide. And the other big one is just the sheer amount of capital needed. It's a very capital-intensive business with long, uncertain timelines for return on investment. That's a constant balancing act.
Managing the cash burn while pushing for growth and navigating rules, a tough challenge.
It really is. How they manage those financial demands against the regulatory backdrop will be absolutely key.
So let's try to synthesize this for listeners. WeRide is definitely active, expanding globally, deepening that Uber partnership. That upcoming earnings report is one to watch for financial clarity.
And you have this contrast, right? Strong tech, global reach, good partnerships against regulatory hurdles, high costs, intense competition, and profitability questions. It really shows how dynamic this whole autonomous vehicle space is.
It raises that central question, doesn't it? Can WeRide leverage its global strategy and partnerships effectively enough to navigate the costs and challenges and truly compete long-term with the resource-rich players like Waymo and Cruise?
That's really what it boils down to. Can they turn that global presence and technology into a sustainable, profitable business?
It's a fascinating space to watch. Huge potential, but definitely not without significant risks.
We definitely encourage you, if you're interested, to dig into those official financial filings yourself. See the details on debt, cash flow. What do you think is the most critical factor for WeRide's future?
And if you found this discussion valuable, please do subscribe, like, and leave us a comment. Let us know what other companies or industries you'd like us to explore next time.